There is an energy crisis in Europe, and it doesn't look like it's going to end anytime soon, with many European countries announcing the turning off of lighting on national monuments, restricting air conditioning in public and retail businesses. And many families are also facing extreme hardship. Are we heading into a long, dark winter? I'm delighted to be joined by Guillaume today. Guillaume, first of all, can we just provide a little update on what's driving this at the moment?
Yes, so that sort of weaponization of gas supply to Europe is effectively continuing. The flows that we had through Nord Stream 1, which is the main gas pipeline from Russia to Germany, are pretty much at zero since the end of August. And European natural gas are trading sort of 5 times the level they were trading a year ago. So, for example, because electricity prices is based off gas, a megawatt hour of electricity was 40 euro a year ago. Now it's up to 200 euros.
Wow.
So very volatile prices. Changing 10% on a daily basis. So basically, that energy market in Europe is not functioning, and government need to step in now.
Okay, so you say governments need to step in now. What are they stepping in to do? What can they do?
So if you look at Germany, they're getting involved by putting support schemes in place for customers. They've also announced a windfall tax on profit for electricity generators that generate electricity from non-gas sources. So think about nuclear, renewables. Actually, we just got really, really large profits at the moment because of those rising prices. And that's something that is getting popular in Europe, and that will be discussed later this week. But French President Macron already said that he's in favor of a EU-wide windfall tax on profits from energy companies.
Okay, so I get that windfall taxes, energy companies making excessive returns, but that can't sort of fill the gap from the money needed. What else are governments sort of thinking about doing?
So it's all about government support. In the UK, they're in the process of potentially freezing the domestic energy bill. Prices were meant to go up next month, so that's a very good news for consumer if they manage to cap the increase. And what does it mean is that effectively the government is going to pick up the difference, and that's going to likely be very substantial in terms of spending.
Okay, so obviously, next question to that is, do we think this will this solve the problem? Will this answer provide the answers needed?
Well, effectively, we were clearly heading into a recession in Europe, and because of that dependence on Russian gas, and effectively, by sort of pushing that cost forward in the future, you potentially buy time to invest and find an alternative source of energy. So potentially you still got risk of industry shutdowns, potential energy shortages, but maybe the government intervention will support the customer at the margin and potentially avoid that sort of very near-term recession. But this is going to have a big cost, and we don't know how long those price controls are going to remain in place. But likely the numbers in terms of government supports are very big, very similar to what we saw at the start of the COVID crisis when the government had to step in to support consumers.
I think this is the most incredible thing as we come out of COVID and we think about what was spent on that. We are now facing a similar fiscal costs as a result of the energy crisis. Obviously all of this is really worrying for many people as they struggle with increased costs of energy. But really, how does this leave us from an investment perspective? I read earlier this week that aluminium factories in Germany already reducing production significantly by 50% because their business is so energy intensive and they just can't afford to keep that going. Surely things like this are going to have a knock-on impact on investment markets.
They have, and they already have. We know that businesses that highly dependent on energy have been more impacted in terms of investment performance. And the positive is that you will get a drop in inflation mechanically because of those energy price freezes, but potentially it comes at a cost of higher inflation further down the line and higher government debt, which could be an issue given that the fact that interest rates are already moving up quite fast at the moment.
Okay, that's really interesting. Guillaume, there's going to be so much more to talk about this over the coming weeks, I'm sure, and I'm sure we'll be talking about energy again over the next number of months. Thank you so much for your time today. It's been really interesting to talk about this, and we will be back next week to talk about another topic that's caught our eye. Thank you.